Good morning, everyone. Welcome to the Euro Trade. I'm Marcus D. I've been trading for 18 years. 12 years out of that, I've been trading with various prop firms. And although I'm Series 3 qualified, I'm not a CTA, so make sure that you familiarize yourself with the risk disclosure that Bruno posted in the chat already. Okay, let's have a look at what's going on with the markets. We do have a question from Ms. Margin, like the name. About time zones in the period between Europe and USA light savings time change. I always feel discomfort because everything is shifted somehow. Do you have any tips? Honestly, it's something that I've been struggling with as well for years. I absolutely hate the daylight savings because you have the UK that effectively changes early, and then in March there's 3 weeks of disparity before the US also shifts their clocks, and then we have 1 week in November, which is coming up very soon, that brings more weirdness. So yeah, from a data standpoint, I hate it because I have to manually change some of my times, because suddenly instead of having 5 hours or 6 hours difference between New York and Chicago, it's 4 and 5 hours. And you know, obviously it's very difficult to figure out if the post-NY cut is going to do what it needs to do. So I would advise caution during the daylight savings period. But in November, it's literally only for a week. So, you know, March is worse, definitely. And then there was that one time when I totally forgot there was a clock change, and it was probably about a year ago, probably even longer. I was supposed to be on fast markets, completely forgot that the clocks changed, and then I was late. So yeah. Okay, let's have a look at gold and copper, but I'm also going to have a look at the energies because I do think that natural gas is starting to do the seasonal long trade slowly. So let's have a look at what Asia did. Asia smashed it down, then back up. Interestingly though, when they smashed it down, it missed the average daily range low by about 100 points before it kind of bounced back. But then we exhausted the average daily range to the upside. Now that gives me a little bit of data. I do think that gold, after this big move down, could have some momentum upside again. And that's because of the daily chart development. So remember when I said, probably about a week ago or so, we have the demand area. Those of you who are regular here, you will remember that I marked off a demand area on the daily chart on gold. And I said somewhere around 40.31, there's room for us to smash down there. Well, guess what? We smashed down there, and now we're bouncing. Into the end of the day, I want to see whether this is going to hold. If yes, we're probably going to go back to the all-time highs. This is relentless, absolutely relentless. Now, the reversals in gold are painful, and at the moment, I am switching to copper because I don't find gold super tradable at the moment unless you use humongously massive stops and tiny, tiny positions. So that's, you know, not ideal. And obviously there are diminishing returns when it comes to that approach, because if you are, let's say you're in a 50K XFA and you don't yet have a lot of room, so you just have, maybe you got yourself into a bit of a drawdown or something, and now you're staring at, or maybe you took a payout and now you only have 1,500 or 1,000 to play with. Should you be risking 150 ticks for stops on gold on that kind of an account? Probably not. And yet that's what the data is telling me. We've actually gone into the ranges that are over 1,000 ticks. So we're actually sitting in overall average daily range of 1,317 ticks. It's insane, right? So using a stop loss that is, you know, if you're going to use 70 or 50 ticks like I used to on gold just a few months ago, what's going to happen is that you're just going to get stopped out because the volatility is really amplifying the moves. And unless you're going just for tiny little quick scalps, it's just not going to work. So if you're looking for bigger trades and something that will be able to absorb the nuttiness that gold has at the moment, you need to widen the stops. Now, you guys know that I like to use probably about a quarter of the session range as my stop. Maybe coming down to maybe fifth or sixth of that range as well, if the market structure allows me to do so. But even then, I'm looking at the COMEX average range, which is 800 ticks at the moment. So if I were to use my little formula for scaling stops, I mean, I can't use less than 130 ticks, really. Now, that's a lot. Do I think there's a good reason to do that? Yeah, absolutely. But again, you need to have a pretty sizable account so that you can go down in positions. So yeah. Well, Coach Robert is has joined us, and I know that he's had some success with silver. So let's have a look at silver as well. So yeah, I'm thinking about a demand bounce in gold. But yeah, I'm with Coach Robert in this case because gold is a bit bonkers. So this is where the love-hate relationship with gold comes from. It can be beautiful, but it's not exactly a smooth product like copper. Copper is actually really smooth once it decides on direction. You're not going to have super craziness intra-candle, right? Now, silver, I think it's a little bit more sane. Again, the problem with silver on smaller accounts is that even micro silver is like $5 a tick. And although it doesn't require humongous stops, it's not exactly a micro contract, right? So it would be more like RBOB or platinum or something, because they are also a little bit cheaper. And those are full contracts, but silver is super expensive. It's like $25 a tick on the full contract. Again, unless you have, you know, massive account, or you are more of a scalper who doesn't mind just taking a few ticks here and there. And I'm not talking about people who trade 100 trades a day or 50 trades a day. Not interested. I'm talking about selective scalpers, right? You do 3 trades per day and maybe 5, you know, and then you walk away. But you get smaller chunks and you're perfectly able to control yourself to not do more than that. Those are good scalpers. I like those. All right, so silver in a similar situation. We're tagging the demand area, having a bit of a reaction, but we're still inside the demand on silver. So it remains to be seen what they want to do and how they're going to play it. Now I'm just going to have a look at the levels in there. When it comes to the London session, we are opening kind of inside value, but it's trying to exit that. And again, in and around this area, we have VWAP. We have the average session range slightly lower at 47.40. Now let's see what the options are doing. Okay, so the HVL, which is a gamma flip point, it's at 47.35. And seeing how they wicked it all the way down to 47 evens, that was actually a put wall. So not surprised. I would expect that to be retested, actually. I don't see any kind of equal lows here, at least not on a 30-minute time frame. But yeah, I would like to see a retest of 47 and then maybe see if price action is supporting gold longs. Until then, this is a little bit too high up in whatever this structure is at the moment, because we've had, this is the Globex Open, wicked it down. So similar to what gold did, just in a bit more of a choppy price matter. But yeah, looking at, like, I have this concept of quartile points, and they're actually useful if you are already looking at a level, but you're like, are we low enough in the swing? And the quartile point from this established high and a low would be all the way down towards 47.15. But again, because we've had this wick down, that gives us price action information. So yeah, maybe another test of that. If they're not able to take it out on the first try, it's probably going to happen at some point in the day. But if it stays as the low that will not be tested today, then that speaks of a bullish nature of the market participants with much deeper pockets than any of us here. And in that case, that 47 level still remains. Would I short down to that level? Absolutely not, because we're in a larger time frame demand area. So therefore, the risk reward on that particular outlook is really terrible. And if we are looking at shorts, if we're a bit crazy and we're like, yeah, let's short silver or gold. If it pulls back up to this base drop formation, so this area at, I'll tell you the price now, at 57.10, to me that will be high enough to maybe look for, like let's say a hypothesis. We bounce now and we turn around, and in the run up to COMEX and into the euro close, we are floating somewhere around 57.10. To me, that will be high enough for a short because of the time of the day. Why? Because the euro close usually brings some sort of a wobble back the other way. And sometimes it can be pretty violent in the right context. Now, yeah, let's see where the average ranges are sitting, actually, because that's interesting. Yeah, I mean, the average range on silver is not nearly as crazy. So yeah, if we get all the way up there to 50.70, that would be cause for me to run a short. But we do have a smaller level intraday. So if we end up in a quieter day and we're not having any external catalysts, you could find yourself that the ADR high on the day, which is only at 49.25, maybe a swipe above 49.30, and then a reversal for a more sort of neutral day type. The reason why I say that is because the COMEX value is actually at 48.180, and then the value low is at 47.45 ballpark. We're right in the middle of it right now. So if we stick around, that could open up a possibility for a range-based day. And in that case, I will be looking to fade any moves as if I'm a market maker. And now what do we have up there? Let's see, 49.30. Are there any options levels there? So not really. I mean, I have 48.75 as a minor GAX level with the highest concentration around these areas. And then we have the call wall up at 50. So that would, to me, make a little bit more sense. But yeah, if we're all the way up at 50, maybe they wick all the way into the supply as well. So yeah, it remains. So my long areas of interest of 47 evens and slightly below. So here's another thing that I see here. So right now we have this equal low here, and that's actually just sub 47, so 46.75. Now if they take that, it would be an amazing opportunity. Whether it works or not, it doesn't matter, but it is technically a very good area to get involved. We're in a daily demand at the bottom of the consolidation that we weren't able to take out on this first try. And then the next area for shorts will be all the way between 50 and 50.75. So keeping it very simple, not chopping up in the middle and just going, oh, I'm going to do this or that. And today, look, sometimes I do go long in the middle of swings, but I have to have a value acceptance in order to do so. So I look at the profile, how we're opening. Are we opening with some sort of a mean reversion? Today, unless we fall all the way down to below the value low, sub 47.40, or if we go way above 48.15, that would be a mean reversion opportunity. But I don't think that we're gonna have that much movement today. Not on silver anyways. So yeah, I have two areas, one where I want to be a buyer, the other one where I want to be a seller. If either one of those are touched before I'm able to run to basically run my long hypotheses. It's difficult to say hypothesis. Then I will stay out of it until we get to some more favorable areas. Savage Sand says, if the demand area that you have drawn is taken out, will there be a change of character? Well, yeah, I mean, it depends how it's taken out as well. So it's not just demand taken out. I'm going short now. I look at how the prices are closing inside or outside of the area. And so let's say that we wick just below this entire demand and then we pull back into the range. Is that really a broken demand, or was that just a market maker smash and, you know, coming back in? Now, if we close the whole daily candle way below it, you are right, that would change my outlook, but only in that case. So I want to see, let's say, another candle like this one happen as it's breaking the demand. So I don't want to see any passive buyers stepping in and creating massive wicks. And if there is a wick, I don't want it to be larger than the third of the candle entire length. Does that make sense? Because that's something I code in my algorithms as a price action condition as well. So if we wick down and then we ended up with a huge 50% buying wick, that's still longs very much active. So we don't want to go against that. So even if that's taken out. So the question is not if the demand is taken out, it's how that happens. So, you know, when you're looking at the candle composition on the daily chart, because there is so much trading information inside of it, you can just look at the single candle almost as its own entity. And for the lack of a better explanation, but the lower the candle time frame, the less likely that sort of analysis is going to make too much difference, unless it's happening somewhere around previous supports and resistances like Asia high, Asia low. And in that case, you can employ something similar, but it's going to be more likely that if you have a demand area or a supply area, you expect them to be run over before they reverse, because there's not that much information inside it. It's mostly noise, and it's also where typically liquidity is. Like if you open up Bookmap and you start staring at the areas, how the market behaves as it reaches those inflection points, you will notice that those big orders keep kind of stacking up just slightly above the reference high, and you're like, what is that? And then they kind of smack into it and they go back. And it's just these games that they always play. So it is, somebody will now say, oh, the markets are rigged. They're not rigged. That is what they should be doing because they need to provide liquidity for the rest of us. And there's no point attaching some sort of a big bad wolf sort of badge on them. Because all the market makers are trying to do is remain market neutral. So they will mostly hedge against some of these perceivable moves. This is why you might get caught out in, shorting for a momentum trade, and then they take out the low and they kind of reverse it back up, and then you get smacked on the face. And then you're like, what just happened? The liquidity stop, run, and reverse. That's what happened. All right, let me have a look at the chat for a minute here, because I think I saw another question. I can find YouTube. Okay, there it is. Let me see. Michael, when you do profile of metals, do you use ETH, 24-hour, or the RTH? For all of them, it's RTH for whatever session is currently happening. I never found much use in larger time frame profiles because they already do this in-depth supply and demand analysis, so I don't need it. I will look at volume profile, which is kind of similar. Like if you look at how the market is behaving here, you can clearly see we have a higher area here. So what's that? It's demand. It should lend some support. And then below it, you have the low volume nodes in this area, which would also correspond with, maybe getting down there to grab some orders and then reversing, because that's what LVNs do. But then when it comes to actual market profile, initial balance, value area, TPOs, all of that jazz, I need to see the actual active session. Otherwise, what are we doing? Using a million different concepts that will all give you the same information. So for me, every concept gives me a different outlook, if that makes sense. Now, also a note on the overlapping session of London versus COMEX for metals is that I will actually cut off the RTH for London in my calculations as soon as COMEX begins, because I don't want to pollute the data. Those two sessions have very different players, and they have very different intentions, different volume, different price action. And therefore, to me, mixing apples and oranges has never really been something that I responded to. And I always felt that I'm getting the wrong picture, because it's like, if we're going to smush both of them into one thing, it's like, oh great, so now we have information that Asia, London, and COMEX all traded in the same area, but I don't really know which session actually has its own value, whether it's like, it's just. And even when when I asked Andre from Edgefold to create the value gap stat, which I think that he's removed for some reason, I need to get in touch with him. However, in the first iteration, he only had it for the 24 hours. It made 0 sense. It said that the price is always inside value, unless there's like 10% of the days when it sort of pops outside of it. But then, why? Because we're looking at the intraday play of effectively the market going into a range. Asia usually establishes the range for the day. You can then pretty easily look at how London and COMEX are using that range. Are we still inside it? Are we breaking out of it? Overnight highs, overnight lows are extremely important for COMEX, especially on precious metals that move a ton during Tokyo, a ton. So, when you are thinking about it that way, it doesn't make sense to use the full 24-hour profile at all. And that's exactly what the stats was showing. So I said to him, but no, I actually wanted it per session. And he was like, oh, yeah, no, we're working on it. And then once he put the per session and you can actually even put the times of the day when you want to cut it off. So that was an excellent stat. It suddenly made sense, and suddenly I saw the same thing that I know is true for, you know, mean reversions, inside days, that a lot of the inside days will end up as neutral day types, and that a lot of the outside days that are within reason will test the value edge, nearest value edge first before they do anything. So suddenly that made sense. And yeah, I think he's removed it for some reason. I haven't looked at it in a while. But that was pretty useful. However, I have my own stats there that we've run basically for years. Okay, let's have a look. I see Robert is causing trouble, apparently. Never, never. You're always welcome there. I take that personal, AG Trader. What's my take on MGC? The same take that I had on GC. So I think we're in the demand area. And MGC is just a derivative, right? It's a derivative of the main products. So I would expect it to quite possibly bounce from this daily demand. So we'll see. How many payouts can I take before getting moved to live? So Robert already answered you. I would say that the fifth payout, like I know that they say, oh, you know, automatic transfer, but it's really down to the risk team. So I would say that at the fifth payout, the risk team starts to monitor you more. So you won't necessarily, it's always at the discretion of the risk team, right? So you may get transferred if they deem that you are pretty consistent and they like what you're doing. But I have known quite a few people that are still, you know, taking more payouts, but they're probably not as consistent as the risk team. Like, remember, these are live accounts, so they don't want to have people that are just going to blow them up in a day or so. So, yeah. So all of your history of what you've been doing, I do believe that goes into the entire decision. Okay, let me see. Can't click the button 1,000 times. Cedric said 100 times. Shame. No. Yeah, so I see that someone's saying in Germany you need a license or something to legally trade a live prop account. Yeah, so I do know about that. And, you know, I don't know whether that license is similar to Series 3, because, you know, I do know that some companies in the States, some prop firms needed you to have a Series 3 before you did anything with them, because they had a mix of, like, it was a prop firm, but obviously they can have investors as well. And I think that muddles things up. And then you're effectively trading not just prop firm money, but it's kind of like a pool of funds. And that would call for a Series 3 as well in the States. However, if it's just literally no investors, you just have the company, in the States and in the UK at the moment, you don't need extra licenses for that. But, you know, in Germany, you may need to get one. It could be just a part. It depends how serious you are about prop trading. You know, some people are just like, oh, it's just a hobby. It's like sort of a little bit of money on the side. But if you're really thinking about this as a career and that's how your country operates on that particular standpoint, then you may have to, shock horror, do a test. Yikes. And look, nobody likes doing tests. You know, I am not a huge fan of tests at 45 years of age. I haven't been to school for a very long time, but over the years I have taken some of these regulatory tests. Like over in the UK, there's a similar one that's called the Level 4 IAD, and it's similar to Series 3. So I had that. Then obviously these licenses expire eventually, but now I have the Series 3. So just it's a part of what we do. So yeah. Yeah, so Coach Robert also says risk management looks for consistency. So yeah, if you have massive swings up and down in your P&L, they're not going to like that. So they're going to keep you on the side as somebody who's of interest if you're generating profits, but you're still going through massive swings, and then they will decide at some point what to do with you. Okay, so Monica from Germany is saying that that's wrong. No BaFin license is required. We're just contractors. We can have a live account. So there we go. We will learn something new. Okay, so again, I don't live in Germany. I live in England. So, obviously I'm not familiar. But I did hear that, oh, you will need a license and blah. I don't know, haven't looked that deeply into it. But Monica is saying that basically if your status is contractors, then you're able to have a prop live account. I'm guessing if you're a permanent employee, that wouldn't be the case. But then again, it's a different status. So yeah, I mean, I would definitely go do a bit more digging rather than doing the whole tinfoil hat. I heard it somewhere, and let's just put it out there. So yeah, I'll have a look at it as well. I'll look into that licensing thing in Germany so that I can educate myself too. But yeah, let's have a look at copper now that we tackled the crazy bunny that is gold. The crazy bunny. Right, first things first, very large time frame, just to remind ourselves what the hell we're doing. So copper is still inside this big consolidation. Which way are they going to go? Nobody knows. Nobody knows. It's still very, very flat. But having said that, I have dog hair in my mouth. That's lovely. And I have 8 dogs, so that's not that odd. They're in the shedding season now. There's hair everywhere. Okay, so sideways movement. And really on the daily chart, whenever it's this flat, you won't be able to derive too much information from it, aside from the fact that it's a range. So let's go down to slightly smaller time frames to get a little bit more information. So on the 4-hour chart, we have this compression of the ranges here. Wouldn't call it a Dorito, really, because to me this still looks, I mean, it's more like a descending triangle. I'm not good with geometry, so let's stick away from that. But yeah, there's a perceivable high, perceivable low, and then a smaller one inside that range. So that means there's kind of like range compression. I do believe this was like some tariff news or something. I think Trump was talking as usual. So yeah, again, 4-hour chart, not too much information apart from a bullish engulfing coming out from the bottom of this perceivable range. So just from that point of view, maybe some longs. Maybe, like, I'd say that in a very high voice because I need to see what's going on lower time frames first. So let's come down to the 30-minute time frame and see what Asia did. So this was all yesterday at 30 minutes low. That's the overnight low. And for now, something sounded a bit weird there. We have the effectively London, well, Eurex opening and then kind of smashing it the opposite way. So that becomes our overnight high. Now, I will probably try and do a copper trade again today. I did one yesterday, got 117 ticks out of it. And I will be doing so at the same time of day. So it's going to be in and around the Euro close, my favorite time of day. But yeah, we'll see. Right now we're in sort of a top quartile of the Asia range, overnight range. So nothing too much interesting. And if I'm looking at the longs of the base of that 4-hour strong move, they're printed as a bullish engulfing. I would really need to see that we fall closer to this profile. Now, one very interesting thing here is that we have these 2 equal lows. So I would be wanting to see a takeout of the overnight low then a reversal. It is one of my bots. And then obviously a wick down, reversal, and then traverse the entirety of the Asia range, or at the very least 50%, depending on how much range there is. So that is something that is interesting on copper. Let me have a look at where the values are now. I'm a bit slow today. I don't know what's going on. Usually I'm like, value areas, quantitative extremes, orbital levels. And now it's like, let me see what is happening. Not enough caffeine today. And I was doing a session with Coach Ray, and I call myself a lazy trader, and then he actually calls himself a lazy lion. And I quite like that. Like, yeah, you're kind of sitting there until prey kind of comes into your view, and then you chase, right? I'm more of a chameleon, where I prefer to not do anything. This is why I've got that guy in the back, and why my VIP group is also called the Chameleonaires. Because we want to sit, wait for trade locations, and then once lunch comes along, you just go bloop, and then you lay on the branch again, just waiting. So for me, if it's one and done, like if the first trade or in and around the euro close, you know, does what it's supposed to do, I'm like, I'm gonna go and do something else now. And this is the beauty of being a trader. You don't have to say, like, you don't want to make trading into another prison where you're like watching it tick for tick, tick for tick. So I like the idea of being lazy with your trading, if that makes sense. Like, not lazy in general, because you still need to learn about price action and everything that we talk about. It's a lot of things to learn. But when it comes to the actual, you know, trading, you don't want to spend oodles of time doing a million trades per day, right? So for me, I will hold a trade for a long time. I will hold it for as long as it needs on the day, as long as it makes sense, and then I will take it off. And I haven't been known to hold trades for like 4, 5, 6 hours. I think the average hold time for me is about 100 minutes. So it's not, you know, it's not too long, but obviously some trades are shorter, others are longer. It depends on the daytime. Right, so for the London session, we're trying to come away from the value area after the value acceptance. However, because London is not exactly its main session, everything starts for the LME, but for me, I like to look at the COMEX values because they tend to be the most, the values with the most volume. So they have quite a bit of relevance, and we are still inside that COMEX value. So let's plop that on the chart. 198.40. Like literally dead in the middle of the range here. This is COMEX. COMEX. Then we have 94.90. I mean, immediately, if we stay in and around this area, I still am leaning towards this takeout of the lows, and then a failed auction or a neutral day if we are doing that. If it goes higher, I would not want to short it in the same manner. So even if there's like a liquidity sweep above it and then a reversal, I would still maybe look for a VWAP test for a trending move outside of the Asia range. So that could definitely be something if we start to track higher. This is the ideal area. And let's just see where the average ranges are sitting. 505. 505. There it is. Let's change that to red and dashed and ADR high. So that's your quantitative extreme that we've been doing over the last sort of 14 days or so. and ADR low, all the way down to 486.60. That is the range. That is the range. All right. Distance between values definitely slowing down. Just for speed, let's look at this. So slowing down with the value distance, slightly overlapping at times. Obviously, that speaks to a range, but the distance between these two is quite small. Yesterday there was a value low reversal. I didn't take that. But I think I took. Yeah, I don't have it printed here, but my trade from yesterday was in and around this area. It was 90. I can't remember the actual entry now, but that was the ADR low reversal, and it was I think I took it at 93.30 or something. I think that was my entry, and then I ran it up to VWAP. So that was a mean reversion on the account of the ADR low back up. But yeah, so that remains a possibility again. So maybe we swipe down below the overnight low, then reverse. So basically just doing the same thing in a range bound market. When it comes to the option levels, we have a sort of a big hole between, which is a good thing, between the implied volatility area at 495 and then all the way up at 5 evens, where the GEX2 level is located. There is a small GEX level in between at 499, but basically we have plenty of space to drop down nicely before we reverse. What's happening here? Hold on, one of my indicators is kind of loading. Oh, it's loaded up. Okay, I don't know why. Probably updating something. Now, as we get above 5 evens, things become a little bit more of a push-pull, tug-of-war sort of thing. Now, keep in mind that we are, for now, in a negative gamma environment. So if we do start falling or rising, it is very likely that the GEX levels are not going to be super responsive in the opposite direction, because when it's negative gamma, it does mean that the price action will be amplified in and around those levels. So we might get up to GEX2, then just a tiny bit of a reversal, then slice through it before we kind of continue higher. But GEX2 is at 5. It also depends how big the move is in the run up to that level. That will play a part. And then if we get down to 495, because of negative gamma environment, I don't expect that to actually be particularly reactive. Maybe like a little reflexive bounce and then just melts down further. But yeah, I'm maintaining my first hypothesis that the overnight low is going to be taken out, and then we go back into the range and rotate. We shall see. Desmond says, D, is it highly probable from stats that London will take out GC low 4021 before COMEX? Yes, it is. Let's go back to GC for a second. But on a day where everything is melting, you have to be a little bit more careful with that idea, because that idea that we're going to swipe the low and then reverse, that works if Asia is fairly range bound. Asia is trending down today. So, sorry, Asia trended up today. So that means that we may hold the low and then go back, swipe the high a little bit, do a bit of gaming, playing around with everybody's minds, making everybody as miserable as possible before they run it up higher as a bounce from demand. So this, to me, is just a down move right now. And if I was going to look for a liquidity sweep of some sort, stop run in reverse of some sort, I would want it to be a lot more flat so that it has an established range. This is a trending market. So right now, we don't actually have a range established. We have down move, then an up move, then a potential for a down move. And with gold, we are, I think we're looking at, let me just check the indicator settings. Yeah, so we are looking at already some sort of an unusual day because we exhausted the average day range high to the upside, but we missed it when it was falling during Tokyo early hours. So that to me is like, well, if this was so weak, why didn't it smash through the ADR low then? Whereas we kind of pulled away and went all the way to the other side. So to me, that would speak about some sort of bullish intention that is like, you know, we're kind of reading into it now, but, you know, that's what we're trying to do. So I would have preferred to see some sort of like equal lows somewhere in order for a sweep to really happen. But yeah, can they take it out? Yes. The problem is we do have this daily demand that might not allow that to happen. So really, if you get a retest of this edge of the demand here, which I like to call conterminous line, I would maybe be open to both sides of the story. This low holding and them getting even lower during the COMEX session because it has so much more volume, and then reversing very late in the day. I don't know which one. And then the third option would be that we just reverse from here, that LME doesn't have much impact on the downside, but they actually reverse it all the way back up and we start trending above Asia high. So what do we want to see? We want to see a strong 30-minute time frame, at least a 15-minute time frame, Mariposa type candle, call them FVGs, call them single prints, call them whatever you want, but we want that kind of price action to hold above this Asia high for further longs, because I think that picking bottoms when the price looks like this is a little bit trickier. Because remember, on copper we have a range on the daily chart. We don't have any sort of a range. Like, we have a demand area that was there from a while back, but how they will play it, to me it's easier to read a range bounce than it is to read a day where yesterday we just melted through and today we had some bounce. But I mean, look at the short candles. They're just like, they're much stronger with a lot more volume. So this is the entire, can you see that? Let me just check my screen. Yeah, so if you see how the market reacted from the Asia session, this was this was terrible, right? And not a lot of volume. And as it was rising, the volume kept falling below this 20 moving average volume bar line. But now we're actually increasing in volume. So as long as the volume is increasing, you don't want to step in front of that. It's going to be like a steam train. You stand in front of it and it goes whoosh. So we don't want to get smushed by a train, right? So I would be patient. Yes, I'm a little bit long biased here, but not to a point where it's like, let's pick the bottoms. Let's be totally crazy and say that this will be the low. I don't know. They might go even lower and then they might reverse. But I would like to be a buyer in and around this whole daily demand area. I'm certainly not going to be shorting here. If we maybe fail above the Asia high, and I don't get the Mariposa strong push above, if that's the case at the time, you know, I'm just kind of running through scenarios in my head and what I would want to see on the chart. That would be maybe an option, but it would have to be fairly late in the day. Like, let's say that we went all the way down, came all the way back up, and now it's sort of like half an hour before settlement. And clearly, on a lot of the days, they won't have enough volume anymore. There are times when we're just smashing into an uptrend and it's not looking back. In those cases, I have been known to run a breakout trade even after hours, because it just kind of keeps going and keeps going and keeps going. And then at one point, literally towards the end of the whole electronic closing, they run it into another all-time high. Sometimes they've even done it right after the actual electronic hours ended. So that's, you know, the day type of an outlier day that just keeps going into all-time highs. You don't want to fight that. But at the same time, is this now a pullback? I want to see what Hogue says today for the opening call, because I lean a lot on his analysis of open interest, because I track it, but I don't track it to a degree, because, you know, I have quite a few things going, and my style, although he's my mentor in profile, I do have a slightly different style, well, quite a bit of different style than him. So it's a good thing that we have differing concepts that we can share together, and then I can lean on his analysis, because I do trust him implicitly. He's amazing with gold. Whereas I have like love-hate relationships. Sometimes I'm smashing it in gold. Other times I can't work it out for the life of me. So it's like... but yeah, so let's see what Hogue says, what's happened with open interest and stuff. And then we can maybe connect that, tie it into like, is the open interest falling? Is the open interest rising back up again? It would be really interesting to see what happens over the next day or so after the big move down. All right, let's have a look at natural gas, because I think natural gas actually is in a bit of a precarious moment. Let's recycle this chart here. Right, we rolled into new contract. So, did we? We were supposed to roll into new contract. Hold on, what's happening there? Just need to check something, because I thought it rolled into December, but how does that work? I'm just going to check something, so give me a moment. Yeah, no, it's still in November. I did not realize that could happen. Okay. So it looks like, yeah, we're still in November. That's very interesting. Okay, so in that case, let me just do something here. Yeah, I always had the impression that natural gas kind of rolled all the time with crude, but obviously not every month is... Okay, so this is the daily chart. Now, just when you're looking at this, you're like, oh yeah, supply, let's short it. Yeah, but if we scale out a little bit more and go to the weekly, you might see something interesting. So we had this demand area that created a new low, and now we held that low, and look at this push already this week. If this is not a strong reversal from a weekly demand, I don't know what is. Again, you can call it a single print, you can call it FVG, you can call it whatever you like. And yes, we do have 2-3 more days before, you know, we have the final weekly candle confirmation. But I'm going to be looking for signs of longs today as a continued move away from this nearby demand. Why? We're also starting to get slightly colder weather now. So naturally, seasonally, gas will increase in price because there's more demand for it. It is a physical product after all, commodity. So yeah, daily chart, wouldn't expect this high to hold because it's on the weekly chart, it was just like a sell-off point where passive sellers were still like coming in and just selling it every time we got there. But now I think it might be time of the year to have a look at some natural gas trades. Now on the 4-hour chart, looking at what we've done from yesterday, obviously a big move up. 30 minutes, did Asia do anything with it? So they also slightly pushed it up, but then we have the classic Tom and Jerry chase, cat and mouse chase of sessions where one session takes it up, the other one takes it down. So now we have London taking it down. This is good for my view that at some point we're going to be having a reversal. Now I'm going to see what is happening with the NYMEX value areas. They have overlapped from Monday and Tuesday, and that's okay. Just changing a few things around. Okay, so if we go higher than 347, that will be a sign that we might be opening above value. That's good. For now, it's still kind of sitting inside that same area. But one thing that I love doing with energies, usually with crude oil and RBOB, is to short them for the pre-market before NYMEX if they go into an uptrend. Now, obviously, because I'm flipping the coin to longs on natural gas, that's going to be a little different. Okay, 340 is the value low. So a little bit lower. Whoops, I just put a new line. Did not want to do that. 340. Yeah. And let's give them a name. This is NYMEX. Now, when it comes to any average ranges, during the times of a reversal from a larger time frame area, they may not be that accurate because we are in a range expansion. So it takes like 2 or 3 days for the market to sort of adjust itself. But we'll see how the options chain is looking as well. All right, so the options levels, we have a call wall at about 350, just above here, basically where VWAP is. And one other thing I want to see, which I haven't done in a while, what the gamma environment is doing. And we're in a positive gamma, okay. So positive gamma environment does mean that some of these GEX levels might be pretty conducive to reversals. And one such area could be 335, which represents GEX3 area. We have a pretty high volume candle from yesterday that ended just above there. So that could lend a little bit more volume confluence to that area for longs, but I do think that we are a little bit high up in this whole swing that we have established, just as a visual reference at the moment. So we have yesterday's swing low, and then today's Tokyo high. That's the entire range. Tokyo doesn't have a meaningful enough of a range for me to kind of go, where's Tokyo low on natural gas? Because I don't care. Usually it works better with levels that were done during NYMEX, and then whatever the perceivable overnight high is. And they usually run it back up to overnight high and just smash that. So So London high and low would be more relevant for natural gas in particular than Asia high and low. But it's obviously contextual. If Asia moved it a lot, clearly you want to take note. But if Asia was a snooze fest with like 20 ticks range, obviously that's not going to be as relevant. If you're hearing coughing, that's my MVD Cavalier over there. He coughs now because he's 13. He's over 13 now, so well done, Lenny. But he coughs every time he gets up. Obviously, his heart is... He's on meds. He's on Betmedin, but he still coughs whenever he lies down and gets up. So I don't know. We might have 6 months with him or something. Maybe a year if we're lucky. It's sad. Sad. Poor Lenny. Yeah, Hogue is the GOAT, Shubham says. Hogue is the GOAT. I absolutely enjoy. Did you see that Jennifer Lawrence thing? She was doing an interview somewhere, and she kept calling that she was working with Meryl Streep, and they kept calling her the GOAT. Like, obviously, we know what it means, but Meryl didn't know. So it's like, oh yeah, the GOAT will go here, and the GOAT will go there, and then Meryl said something like, oh yeah, put the old GOAT there, you know. And Jennifer goes, you do know that GOAT means greatest of all time, right? And it's like, oh, I just thought you were calling me an old GOAT. And I just love how Meryl did not like get offended by it or anything. She's like, yeah, I'm an old GOAT. Yeah, I'm cool with that. So I think it speaks to the like humbleness that woman has, which is absolutely amazing. And I think Hogue is a lot like that. He's very humble, but his brain is massive. Joe Air says, I have a macro thesis for long-term bullishness for energy due demand for energy increases with the AI needs growing. Thoughts? So, thoughts. I mean, I'm continuing to see just a weather-related seasonality for natural gas. Can we say that AI growing might have an impact on natural gas? Well, maybe. But I would also say that maybe copper could be a better thesis there for macro general increase. Why? Because you need it for chips and stuff. I mean, what do we use natural gas for apart from like just general energy requirements to, like, do you use natural gas to run computers? I don't think so. I don't know, maybe there's a new system that I don't know about. But I would say the copper and the chips requirement would be a much greater demand there. But yeah, if we look at a very long-term picture, let's go to the monthly chart. Let's go crazy, right? Can we say that there is a demand for natural gas? So aside from, you know, seasonal tendencies where the demand kind of grows here. Okay, this was COVID, so that's insane. But since the end of COVID, if you can say there was an end of COVID, I mean, we've been in a permanent downtrend, you know, and bar a few sort of pumps every so often. Then you get to February, so, you know, very cold weather, a little bit of a pump, and then it smashes down. Then we get to November, a little bit of a pump, actually for a few months. It must have been a cold year. And now we're coming into November again. What do we expect? Another pump. So I don't know whether I would agree with that thesis. I would probably say no. But why do you think, like, this is something that we could explore more? Why would the natural gas and AI be connected? That's the part that I'm not quite understanding from a macro side. Solar is not that efficient yet. I mean, it's efficient, but it's wildly expensive. Because we looked at solar panels for our house here, because every so often we get like a power cut. Mainly it's because the old infrastructure where I live now, it's a village effectively, And they've had a lot of new build houses, so they kind of jammed everybody in with flat screen TVs and internet and, you know, computers everywhere and air fryers and kettles and, you know, a whole bunch of stuff that all basically stops energy. And then they find that sometimes the energy pushes the network to the point, pushes a grid into an overdrive, and then they have to fix it. So yeah, due for an upgrade. But yeah, solar I could agree with. So solar energy could be the future if it wasn't so prohibitively expensive. You know, it sounds like a good idea, but actually the solar panels, if you look into the maintenance of them, they are ludicrously expensive to install and then to maintain as well. And I have a flat roof here, so it would be, you know, on paper it's perfect, right? But when we actually looked into it, I was like, it's not time yet. It's not time yet. But in the future, yes. Is it time right now? Probably not. Probably not. Joe, solar costs are coming down, but they have not come down yet to be very accessible to most people. In fact, they're still prohibitively expensive. Like we looked at this place, and this place is about, I don't know, it's about 2,000 square feet or something like that. And it would have been like 20,000 pounds to install enough of the solar panels for what we need. Now, mind you, we have 3 flat screen TVs, we have 2 computers, we have all the you know, amenities and everything that you could possibly want. But it, yeah, spending 20 grand now, and then they said it's probably likely that they will need replacing. I was like, so what? Just 20, like what's the time period? And it's like they need maintenance as well. And it just came to a point where you would be spending like 20, 30 grand a year just on solar panels. Like, what am I running here? Nothing that would warrant me to spend 20 grand on potential free electricity. Free. It's all free. Yeah, except at the moment, not that free. So, you know, yeah. Yeah, Joe, maybe, but I don't think it's time yet. I really don't think it's time yet. Wind energy, I think, is complete nonsense. I'll be honest. I think they are for show more than anything. They create some power, you know, some energy, but really they're extortionately expensive to install as well. And then for what they are, they don't really provide all that much. So it's all just like, oh, we've got wind turbines, it's amazing. And it's like, yeah, whatever. So yeah, I think it's going to be a while before we're able to move away from fossil fuels completely. So yeah, I think your thesis probably has some merit for the future. Is it time right now? I would say copper demand is probably what we're looking at in the near future the most, because copper has grown both as a commodity that's used in like chips and stuff, but also as a protection from inflation instead of gold, because the hedge funds used to use gold as protection from geopolitical uncertainties, right? Which includes inflation. That is now shifted to copper because gold has gotten so expensive that, you know, you wouldn't really be able to put tiny investors who come to you with 50K or something to invest. You can't put them in gold because it's too much risk. So they had to find like something else. And copper is an excellent alternative for that. This is why in the long term, I'm bullish on copper. But obviously as an intraday trader, it doesn't matter what I'm seeing in 3 to 6 months time. It matters what I'm seeing today and whether I can take advantage of it. So any kind of macro analysis is useful more for portfolios and long-term position trading. But what we're doing here requires a lot more kind of nitpicking of the actual price action and market making activities in order to get a good position with a smaller stop. So yeah, I think your thesis does have merit. Might be a little bit premature, but you know, we can definitely track that, keep an eye on it, and see how things develop in the future. I suppose that's the only thing we can do. Trading strategies market says, do you need to pay for API keys? If you're talking about Topstep X API, yes, there's a subscription. It's pretty cheap. So I think you can get it for, there was a discount that you could use when they first launched it. I don't know whether it's still there, but even without that, it's only like $29 a month or something. So it's pretty cost effective. All right, so Coach Robert is here with us. So he's saying, yeah, there's still a code. You can use code Topstep for 50% off, and then it becomes peanuts, right? Like literally cheap as chips. Get an API key or two. Just one note, I did discover that the API key that they are providing us will only work on combines and XFAs, but as yet, live accounts are not supported. So just wanted to put that out there. And yes, it's confirmed because I got in touch with their team. So yeah, it's a bit annoying, to be honest, because I would like to run some bots on my live, but for now, we got to be clicking buttons. Right, so idea for NYMEX session or pre-market is that we are able, so let's say that we go up from here and we end up reclaiming VWAP, but then as we get into NYMEX, we swipe down to the value high, then reverse yet again. So basically a value high test and reversal, and then it goes higher. So that would be my primary thesis today, hypothesis for natural gas. If I'm not able to get into a long because maybe they run it up, you know, already in the first 30 minutes, I don't like to get involved in the first 30 minutes of NYMEX because I suck trading the open of anything. So I usually stay on the sidelines until the craziness is over. Then I will probably still only look for pullbacks on the day that would maybe get me either into a failed auction long or something, because I think with the development on the weekly chart, it's so dangerous to be shorting when we've already, so the way I'm seeing these wicks is they're clearing out the orders to move higher. Now, obviously the week has just started, and yeah, is it possible that we just smash back down and create yet another selling wick? Yeah, but look at how they behaved before. So we tried it, took out some orders, smashed back down. Tried it again, didn't quite get there, smashed it down. Then we go higher, we're also not successful at holding the price above the previous high, comes back down, same thing. But now, we're Wednesday, now tomorrow is going to be the decisive factor, because I think, actually, are we still getting natural gas numbers? That's something I want to see. Because natural gas numbers are usually, yeah, so we will be getting natural gas storage number at 3:30 p.m. my time tomorrow. So that will be the defining factor of whether we hold or not. And if we hold, that gives natural gas a bullish picture because of seasonality and because of the technical picture that we will create at that point. But if it fails again, then I might just turn into like more of a range-bound strategy and to fade things to the downside because we still weren't successful on the long side. So again, today, I think the longs might be in order, but we'll see. We'll see what the day brings. Yeah. Now, API keys, they are, how would we call them? They're keys that allow you to unlock trading strategies that are automated. Basically, the API key enables access to bot trading. Let's put it that way. I'm trying not to scare people off. Live is in the works. Okay, so Coach Robert says live is in the works. Awesome. Looking forward to that date. I can tell you now. Don't know what this means. What you account 150K? Don't know. I'm trying to decipher what that could mean. What you account? What is your account? I don't know. What with the time change? What time is the euro close? New York time. Sorry if it's a stupid question. We haven't yet changed the time. We haven't yet changed the time. Now, the euro close next week. Now, is it gonna be? I need to see because we're still gonna run this show by the Chicago time. But do I? I'm not sure if I'm gonna have to get up an hour earlier my time or not. Again, I have no idea. So I'm going to have to pause that question and then give it to you next week because I'll know more like what is going on with the time. Daylight savings is such a nightmare. Like it's just like, ugh. Okay. Yeah, and that's happening. I think that's happening. Let me see. UK time change. I think it's this Sunday. They go back by one. Okay, so hold on. Let me do my time zone converter. Time zone converter. And I do hope. So this was BST. Now we're going back to GMT. And then, Robert, remind me. So the States, they change a week later, right? You guys change. Could you show us a little bit, if possible, on your thing? Let's do that tomorrow, because I actually don't have any of my IDs open at the moment. I can show you a little bit. Obviously, can't show you any personal API keys and stuff, so that I'm going to have to make sure that's not displayed. But yeah, I can show you like snippets of code and stuff tomorrow, if you wish. Yeah, exactly. So Robert doesn't know either. It's like, when do we change times? Nobody knows. I think it's in a week later than the UK traditionally. But yeah, let's see. What would that mean for? So 3:30. And then so are we now CST or CDT at the moment? That is the question. Oh my god, like seriously, the daylight savings thing is like so confusing. I absolutely despise it. Yeah, I think that we're gonna have to do the show an hour earlier, I think, because we move. I don't know. I think we go back by 1 hour. And that means the show is supposed to be at 8:30. That would be a joy. Yeah, I'll be even more useless at 8:30 because it would be like London Open practically. And I do nothing for London Open. Yeah. All right. Anyways, daylight savings next week is going to be a riot. Looking forward to that. Getting confused over the times and going, oh no, it's not settlement yet. It's an hour later. That's right. No, yeah. I know what CST and CDT mean. Thank you, Coach Robert. I'm just wondering whether you call, because we call ours British summertime, BST, and then we go back to GMT, and I always confuse which one is which. CDT, CST. So I think you go back to CST, but you're CDT right now. Yeah. Hi, more downside for gold. Possibly, until post and cut. And then maybe a reversal. I would like to be a buyer somewhere in this zone when the time comes. Anyways, let's end it here early. I don't really have any levels here. They're all very far away from what I'm looking at. So let's just wait until the day develops. So my focus today is going to be copper and or natural gas. So this could be the day where I maybe do 2 or 3 trades. Shock horror. But it also depends. Like if I'm already in one trade and the other one is like popping up, these two are different enough to not really have any kind of correlation behind them. So it shouldn't be too much of a problem running both of them. And in fact, a lot of the times I will run like two active positions in non-correlated products. If they're correlated, like let's say I'm already in copper, but then gold starts turning around as well, I will not be in gold and copper because they're both a part of the same asset class. And even though they have some differences in them, you are still double exposed on the same asset class. You do not want to be doing that. So keep in mind that if you're trading multiple products, although most of you won't, but I'm just saying for those of you who are maybe looking at 2 or 3 things, if they are correlated, you can't trade them together. If they're not correlated, knock yourself out, you know. So, you know, soybeans and copper, fine. RBOB and wheat, also fine. But ES and NQ, not fine. Doubling up. Platinum and gold, also doubling up. Silver and gold, also doubling up. So just keep in mind those little correlations or big correlations, just in case you do want to try trading a couple of different things. But yeah. All right, so we're going to finish it here slightly earlier. And I do have some things to do before the LME starts trading. And I don't think I'm doing anything apart from the VIP with Coach J today for both of our VIPs actually later on today. In the meantime, have a great day. Let's see what it brings. It's going to be interesting. Certainly gold is in a precarious moment, whether it goes, you know, changing the entire structure, or whether this was just a bit of a relief sell-off, if we can call it that, just enough to scare all of the retail investors. Just go boom, and then run it back up again. So we'll see which one it is. In the meantime, enjoy your day. This was the Euro Trade. I'm Marcus D, and I will see you again tomorrow. Take care.